would you work for this founder? And that's why out of 4,000 or 5,000, we end up with 14 because, that's a pretty high bar.
Each of us in our investment team would be speaking to 10 to 15 a week, which translates to 500-ish companies in a year, across 15 investment team members, 5,000 to 10,000 companies in a year. So therefore, getting to us is easy.
Say it like it is, but also like you should know your numbers.
Yeah. And it's okay to say, I don't know.
Better than making it up.
Winging it.
For
Right?
sure,
So,
for sure. Beyond the seed round, the best way to fundraise is not to fundraise. Just build a great company and just do a little bit of awareness building.
I think I saw Mohan's approach very interesting.
Hi, I'm Anand Daniel, partner at Accel. Sometimes a founder walks in and you just know the clarity, the conviction. It's obvious. You may not know how big the startup might get, but you want to be part of that journey. In this episode, we're diving into what really happens behind closed doors when VCs decide whether to invest or not. What makes us lean in? What quietly kills a deal? And how do we go from maybe to let's do this? To unpack it, I'm joined by two of my friends, Rajan Anandan from Peak 15 and Mukul Arora from Elevation Capital. We've all been fortunate enough to back some great companies. We've also missed our fair share along the way. This conversation is for every founder who's ever walked out of a pitch wondering what just happened. So let's get into it. See, I think the first question I want to ask both of you is, and you can pitch in, is there are literally thousands of companies starting up every year here in India. How do they get on the radar to you, Mukul, or Elevation, or you, Rajan, or Peak? Maybe let's talk through that. Like, any thoughts on what's the most high probability approach, and then maybe any crazy ways of getting on your attention, both. Whoever wants to go. Yeah, okay.
Sure. I can start. So, actually, just to give you a sense of scale, so each of us in our investment team would be speaking to typically 10 to 15 companies in a week, which I'm sure would be very similar, maybe more for you, Rajan, given search top of the funnel.
Yeah.
So 10 to 15 a week, which translates to 500-ish companies in a year across 15 investment team members.
Wow.
So, and there'll be some overlap because sometimes there are two of us in the room, but effectively we are saying what? So 5,000 to 10,000 companies in a year is what we are talking to as a team. So therefore, getting to us is easy. If we are talking to 5,000-10,000 startups every year. So that is one. Second, I have seen a shift though in, if I look at our investments finally, if I go back 4 or 5 years, it used to be almost 2/3 where we would have, the first contact with the company would have been outbound led. So someone from our team would have found them, reached out to them, had that conversation, went all the way, finally we invested. So 2/3 was outbound. Today, it has reversed. So 2/3 is inbound, and that inbound could be either the founder reaching out directly, or it could be through a portfolio founder referring them, it could be through another fund referring that company, and 1/3 is outbound. From a final investment perspective, if I look at conversations, it's still probably 50-50, but much more investments are now skewed in the favor of inbound. For us. So that shift has happened, which therefore means that a higher probability way is to find some reference. It could be your angel investor, it could be a friend who runs a company who we might have met or we might have invested in. It could be your seed investors, it could be any of those. But that definitely increases the probability significantly of getting a quick meeting and the process also moving faster relatively.
And the 10 to 15 per week is actual meetings, or these are just things that come in, right? You literally talk or Zoom or some interaction with 10
it's
to 15.
Actual meeting.
So you're pretty open to meeting as many people.
Yes.
And then the people you do they reach out through LinkedIn, email, anything that works better, right?
So like I said, finding a way to get a common connect, nothing beats it. If founders can find a common connect, that works. I still look at all my LinkedIn messages,
Yeah.
but response rate there is low. Just given the volume of messages there, I still open every
Yeah.
email and pitch deck I get.
Yeah.
But again, just given the volume, response rate there is low. Someone in the team will talk to them.
Yeah.
Do I talk to all of them? Unlikely. So referral is still the best way.
Best way.
See, the other thing I'll say is also, given we have a large team and everyone is playing an important role, so sometimes I see founders will say that I only want to talk to the partner. I think you just, if you get a meeting, even if it's with an AVP, with an associate, you take that meeting and convince them. Hopefully you also gain something out of that meeting, but convince them and quickly sort of meet the partner in your second meeting versus trying to solve for that first. And meeting someone in elevation investment team is very easy.
Got it.
Like I said, we are meeting 5, 7, 8,000 companies a year.
Yeah.
So that is easy.
Yeah.
You can reach out through website, LinkedIn, whatever.
Got it. I'm going to come back to you on that. Rajan, anything to add or any,
Yeah, I
any
think
stats? Anything
no, I
you
agree
wanna
with
share?
Mukul.
Yeah.
I think the best way to guarantee a meeting, right, an actual meeting, would be to be referred, as Mukul said, right? And from a referral standpoint, look, we have as peak 400 active companies, so there's 400 times 2, maybe 800 founders in the portfolio, current portfolio. And Surge itself, we have 150 companies, so call it 300 plus founders. So I think getting one of our founders to refer, that is one. I think second would be, as Mukul said, right, other investors, seed investors, venture investors, other ecosystem players. But, trying to get a warm referral, like if a new company is referred to us by one of our founders, we will meet. It doesn't matter what you're building. I mean, that is we have a
That's
very
a rule.
strong,
Yeah.
we have to meet because that is the most important. So I'd say, that is probably, and given, I think, how large our portfolios are for each of our firms, I think founders should work hard to try to do that if they can. Now, that being said, we also have, like for instance, we have stage-specific teams. So we have a seed stage team, which externally is called Surge. We have a venture and growth teams. And at seed, we also have applications for Surge, right? So so actually, you don't have to get referred. You can also apply, and we look at every single application. The last cohort of Surge, which is our 10th, we had 14 companies in the cohort. We evaluated over 4,000 companies, right? And I'd say 3,000 plus of them were inbound applications. So you can actually just apply, right? And but the thing is, you may not get the meeting because we can't obviously have 3,000 meetings over a period of, a couple of months. So I would say it's get referred. You can apply online. I think individually, like for instance, I get so many LinkedIn. I have LinkedIn, I have email. People email me on my personal account. People WhatsApp me. I can't. I feel really bad, but I don't have time to look at all these channels. So at least for me personally, I mean, literally I get probably like 50 emails a day from founders, and I have some thoughts on how to write the email so that I might actually read the email. So you're much better off either get referred, at least for us, in seed stage, either get referred or just apply online. Because applying online, we have sort of a timeline where we have to look at every application we get back, so I think that's probably the way to do it. But look, much like what Mukul was saying, I meet 5 new companies a day. So outside, except Mondays. Mondays all are ICs, right? Seed, venture, SCA, etc. So that's 5 times 4. That's 20. During the weekends, I might take 1 or 2 meetings on Zoom. These are 30 minutes. So my first meeting is always 30 minutes. I will not spend more than 30 minutes. And we can come back and talk about that. So, I mean, look, the reality is you will get a meeting if you use the right channel. But otherwise, you will get evaluated. But your odds, you have to be quite good at your application.
And do they need to really know these founders, or is it?
No, they don't. They don't. Actually, that's the thing that I think a lot of founders don't realize.
The person referring, right?
No, because like if a founder calls another founder, like I can speak about our Surge founders is. They will just, I mean, they'll talk to you to make sure that, but they will just say, look, and usually they'll say, look, I know this person really well, or, hey, look, this person reached out to me just reach out. I don't think you need to know. I think you just have to take the initiative.
Yeah.
And I think each of our firms has so many companies.
Yeah.
You just have to find somebody who's willing to just make a warm introduction.
A first degree connect is what we are
First
looking
degree
for,
connect, yeah. I
right?
think there's
so
nothing to
is there a way
substitute that.
right?
Yeah.
And then there's no prioritization, even though you'll definitely take that founder referral. But if it's some friend who refers, it still gets to your radar, I'm guessing, right?
No, absolutely, yeah.
Right,
Yeah. I mean, we have that happening all the time, right?
Yeah.
Like somebody who, refers.
And do we think there's a higher chance of conversion for these referred versus applications? Or is there any bias after that?
No,
Do we feel?
no, zero bias.
Right?
I
so
would agree.
yeah, I would also say the same thing. Like
yeah.
the number of companies we meet, I don't think after this, like you have to get above the noise,
Yeah,
make sure
that's right.
that you're noticed, right? So after that, it goes into your first 30-minute meeting. Yours is also first 30 minutes? Or
I
like
do 1 hour.
1 hour?
Yeah.
Okay. So maybe let's talk about what are we looking for? Like, are we, I'm guessing if you're meeting, you found something interesting. Otherwise, we won't meet, right? So it's most likely. So what are we looking for there? Maybe let's start with you and then.
Sure. So,
Yeah.
see, in the first meeting, we all have our views on the market. We all have our biases. At least my approach is to suspend as many of them as possible and just go in with an open mind. And I have realized what sort of really makes a meeting special for me. And then I feel like, okay, we should do more work here, is if there is something counterintuitive or some new insight which came out in that meeting. So now it could be about a market which has been there for a long time, but that founder has a very unique take on it, and you suddenly feel like, oh wow, I never thought about it this way. And or it could be like if we go back to our days of food delivery market, and when we invested in Swiggy, like Harsha was the first founder who came and said that, look, the only way to unlock this market is if you own logistics. There were 50 companies before that. No one else was doing delivery on their own. So it's things like those. Very recently, in fact, we invested in a company called Snabbit. He is solving for help at home problem, something all of us face in our homes at different points of market. I've been looking at for 10 years. First time the founder came and said that, look, instead of solving your daily help and subscription problem, can I solve for absenteeism, which is still 3, 4, 5 times a month use case. And that like immediately rang a bell. So for me, I've noticed that insight in that meeting, which makes you sit up and take notice. And like I said, we all have biases. I try and suspend, but still the even better meeting is where going in, I had a negative bias for whatever reason. And I came out feeling that, oh, I wasn't thinking about it in the right way. And this founder has made me look at this market very differently. That really gets my attention. And then we dig in much deeper.
And do you know that in the first 10-15 minutes, or does it take that whole 1 hour, or like how does it happen normally?
Not in 10-15 minutes. It does take that whole 1 hour, or definitely more than 10-15 minutes to get to those details and get to that insight. It does take.
You're looking for
what
time. Is that new thing I'm learning from this person that changes my worldview.
Exactly.
Right. So,
and more often, sorry Anand, I'll just add a little bit. More often than not, I've seen it's very customer backwards, and it's also therefore in some ways a test of that founder's customer obsession. Have they gone really deep? Do they understand the customer really well to land at that insight? And in hindsight, it seems like the most obvious thing, like again, delivery for food delivery. But at that time, it is counterintuitive, very, very customer backwards.
Say that the food in 30 minutes, right?
Exactly.
So right. Okay. Anything you want to add?
I think I'd say in the first meeting, I'm trying to get a sense of how exciting the founding team is. Right, let's take AI. And by the way, I think what we're looking for in the founding team varies by sector.
Yes.
So if you look at AI, we have close to 50 AI investments now at Peak 15. Most of them are like where we invested very early. And in AI, and most like, if you have the application layer, you have the tooling layer, right? So if you just look at the AI application layer, and let's say you're building a vertical AI company, what I'm trying to figure out is, does this team have both the technical chops, the AI chops, but also the GTM ability to be able to do something interesting in a space, right? And that, to me, is the most important. So let's say, you have especially in an application company where you're selling to enterprise, if you have somebody, let's say, if you have somebody who there's occasionally a team, like for instance, we are investors in a company called Arintra, US healthcare focus. They, build, AI for medical coding. Both Nitesh and Preeti are PhDs in machine learning and AI. But Nitesh is very, very good at GTM, right? It's very unusual to have that sort of PhD AI, worked at autonomous driving, etc. And the first time I met both of them, and Pushpak on our team has known them for a while. I mean, it was very clear in the first 5 minutes, Nitesh can sell. And I didn't have any question whether Nitesh and Preeti can build AI. They got their PhDs in AI and they worked at 3 AI companies, and these are like marquee AI companies. So I think that's, and by the way, what we look for varies by sector. So for instance, consumer brands, right? Like for instance, in our last quarter search, we had a company called the Health Factory. They make zero maida bread, and Vinay is just obsessed with bread. I mean, in the first 10 minutes, here is a founder who's just obsessed with bread. And as Mukul was saying, I mean, there were 5 things I didn't know about. I mean, I didn't eat bread, by the way. Before the investment, I never had bread.
Yeah. Oh, really?
Yeah, now I eat bread because, I learned so much about bread because I always thought like bread, high carbs, etc. They have all this protein bread and all that, right? So
I need to talk to this guy.
you should. Actually, it's called the Health Factory.
Okay.
So I think the first big thing is the founding team. And Doug Leone, who ran Sequoia globally for a long time, had a saying. I mean, Doug had so many sayings that I just loved. My favorite Dougism, right, if I can call it that, was this thing he said, would you work for this founder? In 15 minutes, if I get excited, and I say, wow, forget the idea, forget this is somebody I'm inspired by for whatever reason, right? Either they're insight about the market, their technical chops, or some of them are just incredible at storytelling. You're like, whoa, you've got my attention, right? So I think that's the first thing. But I think, by the way, I use that test a lot. Would I work for this founder? I mean, the search founders don't know this, but I would work for most of them. Which is quite, that's a pretty, I mean, not a high bar, but like that's an interesting way to think about it, right?
Will they inspire you for you to give up?
I mean, no. Would you go work for them? Literally,
right?
Would you leave what you're doing and go work for them?
Yeah.
I mean, that is a very high bar. Okay,
Yeah.
and that's why out of 4,000 or 5,000, we end up with 14 because that's a pretty high bar.
Yeah.
I think outside of the founding team, it is to what Mukul was saying is, like very few founders, especially, and I like 30 minutes because it also tells me how well can you articulate the problem. Right? Because before you get to the solution, you got to articulate the problem in a very, very interesting, unique way, right? Where can and then, do you have insights about the problem you're solving, etc. But I would say we tend to massively over-index on the founding team. 30% of our search companies, when we partner with them, are pre-launch, not a single line of code written. Right, so in our last quarter search, we had Ambak and SalarySave, both very interesting fintech companies. They were both pre-launch. Basically, bet on teams and an idea. Right, so it is the team, and especially at seed, it's the team. I think at venture, then of course you're looking for traction and PMF and growth. You're looking for a scalable economic engine. So part of it is also what you're looking for changes. But at seed, we're basically 80% of the bet is on the team.
Got it. Anything to add to that?
See, the only thing I'll add is, like you mentioned, on that ability to articulate or ability to sell. Obviously, in enterprise AI, it's very, very important. One thing I've learned over time is not to over-index on that in some of the other areas, especially consumer, which for me has been a big focus area. Because I've seen it could sway me in the wrong direction in both ways. If a founder is really good at selling, after the meeting, if you really step back and then say, okay, was there any new insight or was it great storytelling? It's a good way to distill, and other way around, that a founder is actually not good at selling, but they shared some insight which you have never heard before. And I have seen, therefore, it can, like I said, take you in the wrong direction in both cases. And in the second category, when you partner with those founders, as they hit PMF, as they become successful, just like any other sort of founder with the growth mindset, this is a skill. And they pick up storytelling, articulation also along the way. So I have over time consciously try to distill it out and say, okay, this is an important dimension, but let me keep it out and then see how much meat was there in the conversation either ways. And importance of that has gone down over time.
The storytelling aspect has
Yes.
gone down. And any thoughts on that? Have you seen examples of that where
I
they were
think,
not
look,
great
To me, storytelling is about the insights. It's how you talk about the problem. It's how you... Storytelling is not like sales per se, right? It's about how do you articulate. Now, the reality is, I think many Indian founders, especially when you compare them with the Bay Area founders, are not as good at how you tell the story, right? But the story is about the problem. It's about your story. It's about the story about the problem. It's a story of how you're thinking about the solution. So I agree with Mukul that, over time, clearly founders get really good at it. But I have a strong preference for founders who can just get me excited.
Yeah.
I mean, like, if I'm going to, if you're a search company, we're going to be with you for maybe 10, maybe 15 years.
Yeah.
I want to be excited,
Yeah.
And to me, that's the Doug Leone
Yeah.
question,
Yeah.
right?
Would you work for
work for this founder
Yeah.
or not? Would you work for this company or not? And so to me, that's really important. So I agree with Mukul that, the best founders evolve dramatically.
Yeah.
You do have founders who are, but like Prakalpa, who's the founder of Atlan, she is extraordinary. She was extraordinary when I, as an angel, invested in her when she was 21. At 29, she is extraordinary. But so some of these things, get better over time. It's good to start with something.
Yeah. Any counters, any things that really founders should watch, or the people who are pitching should watch out for, like mistakes that are avoidable? Obviously, there are things that are not avoidable.
So I'd say, look, in a 30-minute meeting, at least for me, like, don't spend 15 minutes on the founder background. This happens too. Because, like, I don't, like, you know what I mean? Like, Elon Musk wouldn't take 15 minutes. Now, Elon Musk doesn't have to, because you know who Elon Musk is, right? So I'd say, like, just, start with the found, at least for us, start with your story, but keep it really brief. Just touch on and this is where putting some thought to how you're going to talk about what you're doing makes a big difference. Because if your founder background has taken 10 minutes out of the 30 minutes, I don't have time to get into the things that Mukul's talking about. What's the problem? Why is it so important? What are your insights about how you're going to solve it, right? So that is one bugaboo that I have, because sometimes founders will take like 10, 15 minutes. There's two of you. I mean, like, gosh, you haven't won the Nobel Prize yet. I know you will.
Yeah.
So I think that's one. I think the second thing is, it is helpful, even in a 30-minute meeting with us, to have at least a few slides, because it helps you structure your thought process, right? There are some founders who try to use the 30 minutes and just tell the story. I've seen that work 1 out of 10 times, because you have to be really good to keep my attention for 30 minutes, right? It's just you and maybe the two of you on the screen. There's me and maybe one of my colleagues, one of our team members. So that, like, is trying to bring some. So I think giving some really good thought to, like, how you're going to run the meeting, etc. But and the last thing I'd say is, don't be scripted. Because, sometimes I see people reading from a script, because, most of the time, it's on Zoom, right? So I'd say those are some of the things. But please don't spend 10 out of your 30 minutes on your founder backgrounds.
Got it. You?
So I agree with almost everything Rajan said. The only thing I'll add is, sometimes I see founders in the first meeting are wary of going very deep into the data, sharing metrics, and reality is, it is a pitch meeting. And if there is some magic sitting in those numbers, like, don't worry. Like, they worry that, hey, are you really interested? If you are keen, then we'll get into the numbers. Don't worry about all of that. Like, the point is, we want to understand the business. Hopefully, partner, please help us understand the business. So don't, and obviously all of our firms have been around for a long time. We all take confidentiality very seriously. That's the only thing which irks me, if at all, that what are you really worried about? So let's get into the gory details in the first meeting itself, if that helps. So that is one. Second, also, if you are pre-product, it doesn't matter. But if you have a product, personally, I find demos really, really helpful. So always, at least I try and keep time for a product demo, whether it is B2B, whether it is AI, whether it is a consumer facing company, because that really, again, makes your insights, how they are translating into the product, very real. So those are two things I find quite valuable and try and keep time for in the meetings.
I think this demo point, actually, both those are really important points.
If you have something worth
Do a
it.
demo. Yeah, you should show it, right? And because that's the best way to bring to life what you're building. Now, the only thing I would say is make sure your demo is actually a good demo, right? Like, look, some demos just don't work. You have technical glitches, and investors understand that completely. But the demo needs to be good. You know,
You could do a Loom video or something, right? And then run that.
show
or-
the demo.
yeah.
I mean, look, if
Yeah,
it's a product, don't
yeah.
do it. Don't show me a Loom video. Like,
Okay, you
you're
want the
talking to
action.
me.
Yeah.
Take 10 minutes. You have
Yeah.
30 minutes. Even a 30-minute meeting, right?
Yeah.
Take 7-8 minutes to go through the product and do a live demo. Because sometimes Zoom, these Loom recordings of I'm not sure, is it like really a
It is
demo?
real.
Does
That's
it
true.
work or not?
That's true.
So I think that's a great point. And also to Mukul's point, especially if you've launched and you have some traction, talk about the traction like upfront. Because one of the things, especially at Seed, that, as I said, look, a third of our companies are pre-launch. We're totally okay with that. But if a company has launched, I'd love to know, is there something in market? Do you have some users? Do you have some customers? So just say that upfront, because that's helpful, and definitely be transparent with what you've got. And we should talk about one of the things that I think founders should really watch out for is not overstating traction. We should talk about that.
Yeah. Let's talk about it. Like, so that's also a challenge, right? Because right after this becomes what's the next step? Maybe we'll go into that and come back to this.
So let's
say they've done
I
that
think
30 minutes.
This is a really important point because see, let's take a AI company, okay, or a SaaS company, or anything with recurring revenue or consumption revenue, okay. What is contracted ARR? Contracted ARR means, number one, we have a contract. It is a signed contract. It is not an email confirmation from a customer. And it certainly isn't a WhatsApp, let's do business. Okay? And I can't tell you how many founders will call contracted ARR when it's not contracted. And that is a real issue, right? And especially it's an issue if we ask you 3 times. Like I asked 3 times, is it contracted? Is it contract? Because, I want to know is it contract. And by the way, and if it's not contracted, just say it is not, because you gain a lot more credibility by saying, hey, look, we have 5 design partners. We have no revenue. We are in discussions with them to deploy our products. It's a free pilot. That wins a lot of points, as opposed to saying you have contracted revenue, because the next step is we want to talk to customers. Let's say so there's 2, right? There's pre-launch companies and the company that has already launched. Now, if you're a pre-launch company, there's no talking to customers anyway, right? It's really a founder bet and a thesis bet. But if you launch something, let's say you launch a product, okay, and you either have some design partners. I'm talking about B2B, right? And same thing applies to consumers, consumer businesses. So it's like, okay, tell us. So the key is just say it like it is. In fact, I would much rather hear that there is no AI built. We are manually doing this. We're going to collect the data and then we're going to build we're going to train a specific model, right? Or say, look, we're using 5 different models. We don't have our own model. What we have is an innovation on the application layer and, X, Y, Z, etc. And so just saying it like it is wins so much. That is so important. Because what happens is the next step, so let's say we get excited because your contracted ARR is $150,000, which, for a seed company, that's pretty good, and you've told us that you've got these 3 customers. So we're like, hey, Anand, we'd love to talk to these 3 customers. First thing that happens, by the way, if they're not contracted, you're going to stall as a founder. Oh, by the way, no, I don't know whether you can talk to customers. By the way, we just assume these are our customers. If you tell me you can't talk to customers, I just assume they're our customers. Then you say, okay, talk to customers. Then we talk to the customer. And then if the customer says, oh yeah, you're chatting with them. Is there a contract? No, there's no contract yet. We like them a lot. We're talking to them. So you pretty much lost a lot of credibility there, right? So I think just idea that say it like it is. This is where it is. That gets you a lot of credibility. And look, as early stage investors, I mean, especially at Seed, we're not looking for traction. You just happen to tell us you have traction. Now we're going to go validate there's traction. Okay, so you're much better off saying it like it is.
Yeah.
And I can't tell you how many, especially B2B tech companies, right? Sort of, it used to be in the SaaS era, now it's in the AI era. And by the way, like ARR is annual recurring revenue. There has to be recurring.
Yeah.
You know what I mean? So like even like simple terms, understand what these terms mean, right? Like founders should understand. So if you say ARR and I'm like, there's nothing recurring about this, now you lose credibility. And that's not to say we won't go further, but so I think I would say this is really, really important.
I think this is an important one. In the interest of landing a good pitch, don't overstate anything.
Do not oversell.
Right? So do not oversell. And then, because you might get the next meeting, but then that whole relationship of trust is broken if that happens, and that's very tough to recover from.
Yeah,
is
actually
what you're
that is
saying,
impossible
right?
to recover from
Right.
because,
Yeah.
see, the thing is, as investors, we don't know, are you being naive
Yeah.
or are you really trying to sort of say stuff that's not true, right? And that's a bad place to be.
Yeah.
And it's just not worth it.
Yeah.
It's just not worth it.
Very few do it, but even like it's
But the thing is,
right?
I think a lot of founders don't
realize.
when you say contracted AR, I don't think they're trying to be malicious.
Yeah.
Right? They're like, oh, it's okay, it's contract. Where is the contract? Contracted means there's a contract.
Yeah.
Any
other top things like this that from the people pitching should know, that misconceptions, anything else that jumps out?
I mean, I think for me, the number one thing is just most important thing is say it like it is.
Yeah.
Just say, especially
Any traction,
if you've launched and you have some traction, just say it like it is.
Yeah.
Do not overstate it. Do not oversell it.
Yeah. I'll tell you one example. So, like one founder said, I've talked to hundreds of consumers on a consumer problem. And he said, how did you talk to them? No, I created WhatsApp groups, like many of them, and put it out there. Show me the WhatsApp groups. Didn't have anything. Right? Then what happens after that? So don't make up things on the fly. You can say, no, I only spoken to 10 consumers, but they all loved it. The same thing applies anywhere. If you lose that trust aspect, then it becomes very difficult, is what you're talking about. So in the first meeting, you might not get it, but you're going to happen.
Yeah. The other thing is, Mukul mentioned it, one is share the numbers, but know your numbers.
Yeah.
Another thing I find is, okay, it's a consumer internet product.
Yeah.
They say, okay, I got 20,000 MAU. That's pretty reasonable. Then you ask, what's the D30 retention? There's silence. Like, how can you not know retention if you're building a consumer internet company? So I think knowing your numbers. So one, don't overstate, but say it like it is, but also you should know your numbers and your market and the detail. And I think this is really important, the detail orientation, the deep understanding of what you're building, right? And I think this is really important because we've met a lot of founders who, even today, right? I mean, our ecosystem has now evolved. 120 unicorns, 800 million monthly active users, many decacorns, right?
Yeah.
I mean, it's not like 2010 when people didn't know what cohorts are.
Yeah. And it's okay to say, I don't know.
Exactly.
Right? So, I
mean, it's
think
not
we'll
great,
that,
but
right?
you should know.
But I'm saying that's better than
it's better than making it up.
Winging it,
For
right?
sure.
So,
For sure.
So then, we take that first meeting, and the whole idea is to find the next diamond in the rough and work with them, right? For lack of a better way. So what happens after that? So it's either maybe walk through that.
Sure.
Yeah.
So see, typically coming out of a meeting, we'll try and say, okay, what are the things we are excited about? What are the open questions? And very quickly, first of all, you get to an answer to say, okay, do we want to go deep here or not?
Yeah.
And typically we would go deep in, I would say 2 out of 10 companies. 8 out of 10, for a variety of reasons, you would feel like, hey, right now is not the right time.
Yeah.
But in those 2 out of 10, what do we like? What do we know? What are the open questions? And those open questions could be around market. If we don't understand the market as well, it's not a very intuitive market, especially in a lot of these B2B cases, you have to really go deep and understand. Or for us, again, that question in consumer comes back to going deeper and validating that consumer insight. So for us, even in a company which has been around for a few weeks, might have tens of customers or hundreds of customers, we'll talk to as many of them as we can. And we'll try and talk to as many in that consumer archetype who might not be buying from them yet if it's still too early. And then validate that what seemed like that insight in the meeting, is that really true or not? And how is it showing up? So again, if I go back to our Swiggy days, so even when Swiggy was live just in Kormangala, there were multiple companies before that when you would speak to users there and the experience and cohorts. And even in Kormangala, I think we were still at double-digit orders a day, 50 orders a day kind of scale. In cohorts, it was very clear. Customer delight in interviews, it was very clear. Partner experience, even at that small base, partner as in restaurants, of working with Swiggy, the needle which was getting moved because of own logistics was very clear. So that then gives a lot of confidence to say, okay, in that meeting, founder brought this up, seemed like a new insight. When we went and validated in the market, it really matters in this market to the consumer, to the supplier, and that then gets us over the line that, okay, this is something.
And the numbers support that, right? The cohorts and the week-on-week growth and all these things also show that, right?
Yes, yes. No, nothing like numbers and traction if there is that early
small,
data.
But
in some of these cases, like Rajan, you were also saying, these are pre-product, pre-launch. So there it's less numbers, then it's more just talking to that consumer persona and figuring out that does that insight, like whatever the founder is sharing, does it really matter to them or not?
Yeah.
And can we build more confidence there?
Just to summarize, 8 out of 10 times it's a no at that point.
Yes.
Right, we'll come back to no's later. But for the 2, you want to dig into certain things to validate the insights.
Yeah.
Same, similar, different.
Yeah, I would say, it's maybe 9 out of 10 times it's a no.
Yes.
Because, like...
No at that time, right? So you don't...
And I try to, I think our even within our team, we have different approaches. But most of the time, I try to, by the end of the call, let them know whether... whether we are interested or not, because I want to be also very respectful we want to be respectful with the founder's time. And, some of our team members would send an email later, right? And it's for, either we, there was the founding team we weren't as excited about, or we thought the market isn't something that we are excited about, or the insights weren't there, or something like that, right? I think once we decide to sort of spend more time, if we have the time, so depending on, if you're an AI company these days, you have more time.
That's true.
If you have the time, we'd like to spend a lot of time with the founders in person. So 2-3 meetings, if possible, at least 1 meeting, long meeting. So I think and again, like we're trying to understand motivation of the founders, why do they really want to do this? What do we think of all their underlying skill sets? And so on. So I think that's one. Second is doing the market work. I think to Mukul's point, if you've launched a product, then there's some data, and we look at the data carefully. We'll talk to consumers, or if it's your consumer business, talk to consumers, or talk to business B2B, talk to corporate clients or mid market or whatever. So those are the things that we will do, and we try to very quickly get a sense of, is this something we want to do a lot more work on, right? Because of the large top of the funnel that we have, especially in the seed business. By the way, these things vary by stage, right? So at growth.
Let's talk about seed and early.
Seed and early, right? So, so it's what Mukul talked about, which is we do talk to, I do think Mukul and both of you mentioned this when you talked about Swiggy, having a fewer number of either consumers or customers in the B2B context who really love your product is a lot more important than having a large number of customers, right? Like if you're building a B2B company, you're trying to do a seed round, if you have 2 design partners who say, wow, this is a really important problem for us, and we've looked at these guys and we've talked to 5 other companies, and we really think this one is interesting, that is a lot more important than saying we have 10 customers, than having 10 customers, all of them are kind of lukewarm. Or maybe 7 out of 10 are lukewarm. So this idea that find a small cohort that really loves your product, like in consumer, repeats, retention. In our next quarter search, we have a couple of consumer companies. I mean, the unifying, the one thing about all of these companies is the consumers just love the product. They're all early, but they just love it. And we talked to 5 customers, and they were loving it, and so that's it, right? So I think again, build something that people really love, and until you get to that point where you build, that you have a lot of love, user love, right?
The 11-star experience like that.
Yeah, I mean, exactly, right?
Yeah,
So,
it's
and it's so
Franchising.
clear, like you talk to consumers or corporate customers. Like last night, we're doing diligence for AI company in the security space. We had set up a 30-minute diligence call, went for an hour, not because we wanted to. Because the customer wanted to tell us more and more and more, and we cut it off like the next 30 minutes.
Yeah.
So I mean that one call,
Yeah.
I'm sold.
Yeah.
I'm sold.
Yeah.
It's a big company. So I think these are the things that
Yeah.
So
Whether it's
spending time-
consumer, customer, B2B, anything.
Doesn't
Like someone really needs
have
to
you
love the
built something,
product.
especially if you've launched, right? So
Yeah.
there's pre-launch and there's post-launch. If you've launched, and even if it's a design partner, and by the way, what people also don't realize is, even if they, like, firstly, if you're not willing to share, we're doing diligence on another very interesting company, where this one has quite a number of customers. So one is they handpick and give us names. This one just sent us the whole list. That's confidence.
Yes.
We picked the ones. And that to me was very interesting, right? Like, wow, that's a lot of confidence. We just called. So we called like 25 of them, and they were all like, 23 of them were like really happy. So
And then how's the decision made post that? Maybe like what's the process? You like it that one or two you're continuing? Like
Right.
walk us through the like big decision meeting, whether you call it partner meeting, IC meeting, whatever you want to call it, right?
Yeah. No, so for us also, like Rajan mentioned, this market work and spending more time with the founder is going hand in hand. So what we are discovering about that market, we are playing back to them, hearing their thoughts, and also building more comfort, mutual comfort along the way. So for us, step one then is to say, okay, whoever is the deal sponsor, are they at a place where they want to move ahead and do that investment? And that could take literally like 48 hours from first meeting to doing a lot of customer work to then meeting the founder the next day again, and end of the day coming back and saying, okay, we want to partner here. Or in some cases, like you mentioned, a no is not a no forever. We'll talk more about that. It could take 1.5 years.
Yeah.
Like Misho, from first meeting with it to actually when we invested in their 3 million round, it was almost like 18 months. Spinny for both of us, from meeting first Neeraj to when we finally invested. But once the investment team is at a place where they want to move ahead, we do have an IC process. IC is investment committee. So all of the partners meet the founder in person once, because again, in these early stages, it's mostly about the founding team. And but unlike like some of the funds in the US where all the ICs are on Mondays, we can just set up our ICs very quickly. So it can happen at a 12-hour notice. So we
The founder pitches?
founder pitches.
Okay.
And we try and do it in person as much as possible. If not, Zoom is also fine. So the founder pitches to all the partners, and then at least in seed and most Series A's, right at the end of that meeting, the investment team will also present all the work they have done on the market, why are they excited, and we'll get to a decision. In very few cases, there will be some follow-ups. In seed, it almost never happens. In Series A, sometimes. In Series B+, it happens a lot. When the ticket sizes are bigger, that there will be some follow-up questions that, hey, these are some more questions. Can the team go back, do that work, and then we revisit? So that's what a meeting would look like. And at seed, again, if I look at companies who come to the IC and where we end up investing, it will be almost every company. So there, even as a partnership, we are really leaning in on the conviction of the investment team, investment sponsor, and seed anyways is so much of a game of personal style versus any patterns or frameworks. So we really lean into that. But the goal is more one for the broader team to still meet the founder. If there are any blind spots which the person might have missed out, you share them. Plus, each of us look at different sectors. So like I mentioned, I focus a lot on consumers. Someone might be looking at fintech, etc. And there are companies which are at these boundaries. So at least you can get feedback from everyone, which could in some cases even make you more excited or make you more aware that yes, we should go ahead. But by the way, after we invest, let's work on these couple of things. So that's our process, where each founder would come and meet the partnership, and then very quickly we'll get to a decision.
And then if you get to do that meeting, that's a good sign. Most of them are going through.
Right.
Other cases where it hasn't gone through, and what are the top reasons why? Let me ask.
So seed
Seed or series, it doesn't matter. Yeah.
seed very unlikely
Yeah.
that will not go through. Series A, the reasons could be around like at that stage, some early markers of product market fit also become important, and they're getting the group's view to say that, hey, is there really product market fit here basis what we are seeing or not? Let's go validate that. And one thing I should mention is, as a fund, our very clear philosophy is not to invest in competing companies, and therefore for us the bigger risk is saying that we partner, but then once we partner we are not going to invest anywhere else. So therefore, if we are not fully convinced on that PMF, do we invest now or do we wait? And that's where some of these decisions end up being that, okay, let's wait for now.
Let's wait for a little bit more signs and everything to show up.
Correct.
Okay. And is it one person's decision, or like majority have to say this is great? How does it work?
In our investment committee, it's more of a discussion and then feedback to the sponsor to say that, hey, this is what we think. And then eventually, if they still want to go ahead, they go ahead
So
with the
it's
investment.
that conviction of that person who's putting the deal forward,
Yeah.
the investment forward. Okay. Walk
Yeah,
us
I mean,
through
we
your
have a
process.
similar, so we have stage-specific investment committees. So I think the first thing for founders is, you should ask the question, right? Am I presenting to an investment committee or not?
Yeah.
And usually the teams would sort of say, right, regardless of the firm, they'll say. So our seed investment committee, or the surge investment committee, is very small. It's Shailendra, myself, and the surge team, the surge investors. And we are much like Mukul was saying. We have some fixed slots, but it's very flexible. The most exciting AI company we invested in this year, we met the team on Friday night, Saturday morning at 8 a.m. We had an IC, and by 9 o'clock we had it.
Wow.
Right, so we got to move fast because but that being said, we'd love to have spent a month. This is a founder we've known for a long time.
Yeah.
So to be fair, so we're quite flexible. We have some standing slots. We have 2 slots a week. Sometimes we use it, sometimes we don't. But really, we do that. So I think that's at Seed. Our venture is the venture team, and then a few others who are part of it. Those tend to be. Usually on Mondays, the investment. And by the way, there's for us at Seed, each team does it slightly differently. What we'll do is we'll send a detailed note before the meeting.
People read and
the team who's been working on the company will do all the work. We'll send a note. Everybody will read it. They'll vote before the meeting, so we know what the votes are. We also know what the questions are, and then the founders will come and pitch. After that, we have a debrief of the team, like within just the internal team. And usually we'll make a call there. And I'd say 80% of the time it's either yes or no. So unlike what Mukul was saying, I haven't measured what percentage of the time we say yes. No, I don't know whether it's what percentage of the time, but it's not always a yes. Okay? Because we believe that we want to see more companies being brought forward, right? As opposed to fewer. And then I'd say 80% of the time we'll say, yeah, let's go. I mean, if you're going to go ahead, we'll say go ahead. But 20% of the time we'll say, hey, look, let's find out, these 1 or 2 things. But it's usually very quick. So that's at Seed. I think at Venture, there's sort of a different process where there's a company introduced, and company will then come and present, and then there's an internal discussion, and then they go forward. So different teams have
similar, right? What's the difference? Sorry, just to be clear.
No, so we try to shrink the process.
Okay, in the
we try to make
side.
it faster. We just try to make it faster because
Yeah.
Usually Seed moves quickly.
What do you mean by vote before the meeting?
No, so
Before the
basically you send a
company-
memo,
Yeah.
and then everybody will say like, do you like this company or not?
Okay.
Right?
Just saying
and
yes
they'll
or
say,
no.
I mean, there's a system that we have.
Yeah.
But most important is they'll say like, what are the questions?
Okay.
Right? So that way the team that's working on it knows what the questions are. And either the founder will address those, or usually in the debrief we'll try
That's a really good
we'll try to get into it.
And
So usually by the time, I mean, this is assuming we have time.
yeah.
But if you have like the normal process, and then there's the sort of meet on Friday night, Saturday morning, you decide. That's the exception. The normal process is when the founder comes to pitch, we know where the investment committee is on this. Okay. By the way, the best investments we make are not consensus investments, right? So there's some team members who think this is not a great idea. Others think that it's a great idea, and so on. Those are the best.
Yeah.
I worry a lot when there's consensus. Everybody thinks this is really good. This is what we've seen.
Yeah.
Right. So usually we know where people are.
Yeah.
And we're able to answer those questions.
Got it.
But there's a lot of discussion. There's actually it's a very healthy discussion, and we get our younger team members, all our team members,
Yeah.
to listen in, and they'll say, look, this is not, and this is why it is. And then, the team that's working on it has to sort of say, why do they think otherwise?
Yeah. And what are the discussions like which people won't hear about? Like, let's say particularly about teams and.
Yeah, I would say, look,
yeah.
most of the discussion at Seed will focus on the founding team, right? And so that's one. I think the second is the market. But the market, because we invest across such a broad range, much like all three of our firms, right?
Yeah.
From AI and semiconductors and quantum and space all the way through consumer brands and gaming and healthcare and financial services.
Yeah.
That's a pretty broad spectrum, right?
Yeah.
So no one team member, knows all these segments, right? So we'll have, let's say we have a sub-team that really is very deep on dev tools, cybersecurity, infrastructure, right? That we're going to depend on that team's view on the market and so on and so forth, and even those founders. So I'd say there's a fair bit of discussion on that. On the market, there is a discussion, but in general, we over-index on the founders, because we think that the best founders will go find the right idea, and then this question, if there is traction, and then we'll sort of say, hey, is this really contracted or not, or what is it? Those sorts of things.
Got it. Anything you want to add? Yeah.
See, Seed, very similar to what Rajan also said. It's mostly the founder and what did we like, what are the clear spikes in that founding team that we are really excited about. In Series A, we do go into PMF markers also, and Series B lot more into those PMF markers, unit economics type of things.
In the Seed, in early, it's mostly team and then market. Market.
Yeah.
And if it's a no because of team, right? What's the reason? Why is it a no because of team, and how do founders address that? Do they get to know it, or is there a way?
That's a tricky one. I think that is a tricky one. No, we do. By the way, we try to get back very quickly and say we are going to not pass. We will. Look, if we've spent meaningful time with the team, usually if they've come to investment committee, that means we have spent a fair bit of time. We try to explain there's a AI company that I really like, but the team has rightly pointed out that they don't have the right combination of tech and GTM, right? And I've been very transparent with the team, because I've spent a lot of time. And look, you have to fix this. You have to get this gap addressed. So I think it's a range of things, but usually, look, we won't be not transparent, right? Because with the team, usually, what is it? Is it that usually what it happens is, if it comes to IC, it's like this, especially in a B2B context, it's this mix of tech and GTM, right? I'll give you another interesting, if you're building a global B2B company and the founders don't want to move, one of the founders doesn't want to move to the US, right? That is increasingly becoming very difficult for us, because if we know you love your dosa.
There's good dosas in the valley.
This is true. Exactly. That's why you should move, especially if your customers are there, So again, we are transparent, right? Saying, look, if one of you is willing to move, I think last year, one of the best teams we met was a team we really liked the space, but neither of the founders was willing to move. And we said, okay, so call us back when you have a product, and we look at PMF, and then we look at the series. So we try to be Anand, but I think that's the one where, the team is what it is, right? The founding team is what it is. If you know them really well, you can be transparent. And I try to be transparent if we know the team really well, because it's only the right thing they should know. But it is tricky.
Yeah. I would say, my personal thing is almost everything else we can share easily. And if it's related to the team, it's for the team to ask. Is there any team related? We're not going to hold back.
That's a good one to do it.
So,
that's a good way to do it, because the investor may not be forthcoming.
Correct. Yeah.
But asking, saying, hey, look, give us feedback on our founding team.
Yeah.
That is a great question.
Yeah. Give us feedback.
they-
We're going to give you feedback. And then after that, say, is there anything on the team side that I need
That's
to
right.
be aware of?
That's right.
If there's a question then we know that the startup is interested in really knowing it.
That's
then
right.
we would share.
That's right.
Otherwise, it's tough to say, I don't think you're going to make it, right? So it's like, you know what I'm saying? So it's not like that. It's usually the combination of the skill set required to build a team is what's lacking, right?
Yeah,
It's the
yeah.
toughest one to give feedback. At least personally, I find that the toughest. Very few we can share because you've built that rapport.
But I really like what you've suggested, Anand, which
yeah.
is for the founders to ask this question.
Yeah.
And I think if you ask the question, you will get the
Yeah.
you will get
Yeah.
the
Yeah.
Yeah, with an open mind, you ask, hear it.
yeah.
You
Because
don't
then
have
you
to
know,
respond.
right? They're okay to hear it.
Yeah. And then they just take it in and act on it or not. It's okay. If you hear it from 3 VCs, then you know, or 3 investors, angels, then you know there is something there. Because the next question is about no there doesn't mean it's a no forever. Anywhere along this process. That's why this is an important one, for,
Yeah,
right?
yeah.
So maybe talk about that with the experience or
Sure,
whatever
sure,
you
sure.
want to give. Like as a
Sure.
yeah.
Yeah, no, let me spend a minute on your previous question also, and then
Yes, please.
link it to no, not being a no forever. So it is hard to give very deep, very candid feedback to founders, and I really love your idea of saying if the founders ask it, it makes it easier. Having said that, I've also seen the most mature founders, and maybe they'll also ask, but they actually really value that feedback and they listen to it with a very open mind. And I remember one of our seed ICs, one of the rare ones where actually we did not go ahead investing in that round. And what happened was in that pitch meeting, so one-on-one, that founder was really good. We would go deep into the sort of numbers, etc. In that meeting, when people were asking him questions, he would become a little angry that why am I being challenged? And when you are responding from that place, then that clarity of thought doesn't really come through. And in our so finally we did not get over the line in that meeting, in that IC, and I called the founder to tell him that look, we'll not be moving ahead. He did ask this question, that he didn't say on the team, but what could I have done better in the pitch, and I openly shared with him. Thankfully, we did invest in that company a few months down the line, and that founder sort of took it to heart. Next board meeting, next IC meeting, he was so much better. Today, again going back to our original discussion on articulate founder, one of the most articulate founders I know. So that being open really helps, but the founder being more open and receptive does make it easy for us also to share that feedback.
Okay, this is a great way also. What could I have done better?
Yeah.
I mean, I think a couple of these questions, just getting investors to also be more transparent.
Yeah.
I think founders will really benefit from, because as you said, it's hard, right?
Yeah.
In the yes or the no, if the founders can ask
That's
this.
right, both
Right. So
cases.
both cases, because there's always the best founders I've found are like some of the best learning machines.
Yeah, they're all learning machines.
Like they continuously want to learn
Yes.
from VCs, from me at least, very little to learn, but they learn from everywhere, right?
Yes.
So it's amazing to see them, and then they ask the right questions to learn.
Yeah.
So it's the whole thing is a learning experience, right? So yeah.
And so then linking it to the second question on no not being no forever, there my first watch out to founders will be, sometimes I see again founders see fundraise as a validation of the idea. That is a trap. So they should take our feedback with an open mind. But again, whether are you pursuing the right idea, is the direction correct or not, go back to customers to validate. If 4 VCs have said no, and you suddenly then go back and say, okay, let me pivot or make it what they might want to hear, it's the worst thing to do.
Yes.
And the best founders would have gotten no's. They would have taken it with all intellectual openness, gone back to customers and understood and iterated over time. So going back to the Misho example, in those 18 months I spoke about, from first meeting to actually when we invested, the company went through couple of pivots. With it, Sanjeev would have received, not would have, they did receive a lot of no's, but stayed course. They realized they were onto something interesting, kept iterating based on what they were hearing from the customers, and nothing succeeds like traction end of the day. So to Vidit's credit, again, every couple of months there was a standard template he had of his traction, that this is how my users are growing, this is how my orders are growing, this much from repeat customers, this is what my GM or CM looks like. Every month or every second month, that email would come. This is once they were on the last iteration before we invested, and then 3 months of those emails, and all this while we were also constantly meeting or interacting on phone calls, and he stayed at it. They were literally a few weeks from running out of money, but the goal was still to say how can we make our case more compelling to the customers, and therefore by extension hopefully to the investors as well, and keep communicating that progress. And there was clear sort of signs of PMF at that point, and there was no way we could have ignored it, and we moved ahead and invested. So therefore, like, no is never a no forever. No, it also does not mean you are doing something wrong or you need to change direction. It's only a moment to pause, go back, talk to the customers, revalidate your thesis, especially if you've gotten a no from multiple investors, and then keep sharing your progress with the VCs. And best investments, like Rajan, you mentioned, they are not consensus. In fact, I have seen in a lot of cases, when you have spent time to build that comfort, trust, seen some of that validation, those actually end up being the most successful partnerships. So that really, really helps.
Yeah, absolutely. Anything to add?
No, I agree with that.
Yeah. And any no's that have converted for you later?
Yeah, lots actually.
Yeah.
So at every stage, I mean, of course, at venture and growth, you see companies for a long period of time, right? Especially in growth. So, you're just looking to see at the right point, do the metrics all line up, because you're looking for PMF at Series A, and then at growth, you're looking for an economic engine. I think at Seed and Surge, there are lots of examples of companies that we would meet, we would pass maybe, and then, 6 months or 12 months or 18 months later. We spoke about Arintra, right? The first time we met Nitesh and Preeti, I hadn't met them, but our team had met them. These were two PhDs in AI that had never done anything in healthcare, that were trying to build a healthcare AI company. I don't know, selling to US hospitals is like pretty hard.
Yeah.
So we had said, let's not now.
Yeah.
I think it's a not now.
Yeah.
Right? Not now. And then, whatever it was, 6 or 9 months later,
Yeah.
I think Nitesh had shown that he could go out and really sell.
Yeah.
Right? And that's when we decided to partner with them. So there are lots of examples like that.
Yeah.
And also what happens with us is, like, for instance, in our next quarter search, we're a very interesting AI in finance company.
Yeah.
They had applied, online. Our team had met them in November, and then we've just tracked progress. And it's sort of a very, very niche AI application in finance, B2B finance. So we wanted to sort of make sure that, like, it wasn't obvious that there was a 10x product you could build in that vertical. So I met them in November, and I think team stayed in touch, and now we're investors. So I think this too, I completely agree with Mukul that there's not a no forever.
Yeah.
Right? There's no such thing. I think that, but at the same time, when somebody says no, please keep in mind it's a no for now. And I think this is where founders sometimes try to convince. Like, I say no, and then, like, I'll call like half an hour later. They're trying to convince me. I'm like, there's nothing you can tell me that I'm going to convince. I mean, I'm just like, no for now.
Yeah.
Right? So the idea is no for now. And I really like what Mukul is saying, and we see the best founders do this all the time, where once a month, just send an update.
Yeah.
By the way, we read everything.
Yeah.
Okay? Except for that intro email that, I should talk about that.
Yeah.
So founders will send an intro email. It's like 7 paragraphs.
Yeah.
I have no idea after I read it what they're building. I don't know whether it's launched or not. I have no idea what the metrics are.
Yeah.
And my natural instinct is not to respond.
Yeah.
By the way, that's the other thing.
Yeah.
If an investor doesn't respond,
Yeah.
it is 100% we are not interested.
Yeah.
Right? I mean, like, we try to get all our investors to respond because we should close the loop and give founders feedback, etc. But sometimes founders are wondering, like, why even our search founders, right?
Yeah.
when they're trying to raise their Series A or Series B, I met these investors, they haven't responded. I'm like, look, that's 100% they're not interested. So, you don't have to, like, follow up 5 times, because if investors are interested, they're on you.
Yeah.
Right? So I agree with Mukul said.
Yeah. And then just to close out on this, like, so the best founders are able to stay in touch, post that no, and then keep you engaged, right? It's a relationship building, and then business is evolving, and say how you're evolving, and then you convert. We have many cases like that. So I think it's an important thing. And I know, Mukul, you're really good at it, like hundreds of companies you're meeting, but you still keep track. But I don't think I am, right? So many investors are at different places. So when you're meeting hundreds of companies, don't don't assume the investor is going to keep track of you. It's better to assume that the investor has a lot of things going. So better to send that updates and
it's an easy thing to do. Once a month, or once a quarter, send an update. Keep it short.
Yeah.
Start with, if you've launched and there's some metrics, keep it focused on what's the
Executive
progress
summary.
since. It can be right. Like, I signed up 3 customers. These are the logos. Whatever. And I think that it's such a simple thing. It takes 10 minutes. To do. And probably the other thing I'd say is less probably for the seed round, but beyond the seed round, the best way to fundraise is not to fundraise. Just build a great company and just do a little bit of awareness building. Little bit. Right? Just, if you like a lot of founders don't want to be on X or be on LinkedIn, but find some way where, just build a bit of awareness. And also, if your seed investors, get them excited. Like our best founders, have these WhatsApp groups with investors. They're always saying updates. I'm like, whoa. We're like, the best ones, once a week, you look at it, it's like, whoa. It doesn't matter, right? Hey, went to Dubai, closed this customer, it's called Aramco. Well, really? Aramco? It's a consumer app. And hey, retention's gone up. M1 retention has gone up from 29 to 31. Like, whoa. So you keep the excitement going of, excitement within your investors, because they'll talk about company. Because, you have to be top of mind for your investors, right? Because all of us,
your angels, your seeds,
your seed investors, etc. And so this idea that the best way to fundraise is not a fundraise. Right? Because all our firms have teams that are out there every single second. Looking for the next interesting company.
Absolutely.
Right? So they should be coming to you. And not you having to reach out to, so just focus on building once your seed round is raised, we try to have all our search founders just get to product market fit. Keep the team small. If you get to product market fit, everybody's interested.
Absolutely. Cool. I think we covered all the main questions. Quick round or rapid round on breaking the myths in a few things. We'll start with you. We're trying to ask some break the myth kind of questions. What's one belief founders have about fundraising that's totally wrong?
I already mentioned it. I think don't take VC feedback very seriously. Go back and validate with customers. If VC says no, it's fine. It's their point of view. But you know your customer better. You know your market better.
Don't change your business because...
Don't change. Absolutely not.
You want to add to that?
I would say, I agree with that. By the way, I also think that I would even go a step further. I think the best founders... many, not all, but many important decisions they make, actually the board doesn't agree, right? Because they have the best instincts. I'll give you a real example. I was an early angel in Capillary, and I was on the board twice. And then Peak 15, Shailesh, my partner, was on I was a personal investor. This is one of the few boards I was on, and Anish always did what I thought was not right. For a long time, I'm like, don't go to the US, just get Asia right. And went to the US, and that made the company, right? So I can give you lots of examples. So now when, our founders sort of want to do something that we don't think is, or I don't think is great, I'm like, go for it, right? Because they have the best instinct. So I would add to that. I think the only other thing I'd say is, look, if you're really, really lucky, you may raise a round with 1, 2, 3, 4 meetings. But especially if your seed round was very easy, your Series A is probably going to be hard, right? Like one of the greatest examples is Harsh at Dream 11, right? 105th meeting is when Kalari committed to lead the A, and now that's the most important gaming company in India, right? So I think you just have to stay at it. Don't lose confidence. Now, ideally, best way to fundraise is not to raise, but there you have to have really exceptional metrics and some way of communicating it. But otherwise, just don't lose heart. I think to Mukul's point, I totally agree. Build the company you want to build, not what others want you to build. I think the worst ideas are the TechCrunch ideas. Like whatever's hot on TechCrunch, next week I'm going to see 5 pitches. That's not a great way to build a company.
Awesome. So unpopular opinions, right? What's something you believe about early stage investing that most people in VC wouldn't admit publicly?
I'm not going to answer exactly that question because I don't know what other VCs believe in or not. Because it doesn't matter to us.
Wouldn't admit publicly.
No, I mean, I think I'll tell you one interesting, consumer brands, how big can they get, right? I think there's a general view in the investment community in India that, maybe these can get to 2,000, 5,000 crores, and maybe there's an occasional exception of 10,000 crores like a Mamaearth. I actually think the breakout consumer brand companies over 10, 15 years can be very, very large. Okay. And the reason is, you look at Britannia. Britannia is 15 billion market cap. They make biscuits and bread. So we had in last quarter search, we had the Health Factory, right? They make zero maida bread. By the way, they were the first company to cross 100 crores of revenue while in surge. That's how fast it's growing. Because they have this great product and they have quick commerce, and quick commerce is growing, as you guys know, right? So I think, like, for instance, I think and this is not answering your question directly, but the big debates, I think, among partnerships happen. Let's set aside the founders, because that's a very early stage, seed stage, right? Because after that, there is a product, PMF, is around TAM. How big is it, right? And I think in India, every decade, we have underestimated TAM of the next decade, right? And I think we are going through that with some sectors like brands, right? Do I think there will be a $5 or $10 billion brand? Absolutely. Consumer brand in India. Do I think there could be many? Absolutely. But that's not the view today, right? The view today is that these brands can get to 2,000 or 5,000 crores. Maybe the exception will get to 10,000 crores. That is a very 2025 view. But as early stage investors, you're taking a view of where India is going to be in 2035. Yeah. Right? 2035 will be $7-8 trillion economy. Most of that growth is going to come from consumption. So I think that is where, and I can go through different sectors. And I think that's sort of I'm always intrigued because there are these strong views that the venture ecosystem has. Yeah. I mean, the brands is one of them, right?
Yeah, that's great. Maybe last one. Complete the sentence. I believe in founders who... ...
are extremely customer obsessed.
Okay. You?
I think just excite me. Get me excited.
Yeah. Okay. Good. On that note, thank you. I think we covered most of the stuff. Really appreciate all the insights. I think this is going to be super helpful. Yeah.
Good.
Awesome. Thank you. Sorry.